We're going to put gold in the top left. Top right, we'll put the S&P 500. I do have a long trade on S&P with a trailing stop on this. So I am in profit on this trade and looking to see if I either get stopped out for a profit, which I wouldn't mind, or if I'm going to hold on. We got dollar bottom left, guys. And in the bottom right, we're going to put the euro. Okay. We've got 15 seconds to go for our breaking news. Check it out. All right. We are T minus 6 seconds. See what PPI brings us here in terms of volatility this morning. Let's see what we get. All right, and gold finding its bearings. Dollar down. Dollar continuation 102.55 printing here. S&P shooting up. Euro finding some strength. Gold retesting 1950 currently 1951.5. I feel like I'm an auctioneer. Somebody commented that yesterday. Do I hear $55 try it again, sir? In 55. I could pass. S&P 500 really staying strong here. I'm loving to see this. I'm still in my trade. I'll show you guys my brokerage statement or my brokerage account where I am long S&P. I'll log in really quick. So we are currently floating over 2,000 on this trade. This one is going rock solid. This trade is just killing it. We took this inside of the group, and I don't actually have a take profit. I'm just using this to track the trade. But this trade is just going crazy. Look at this. At this point, we are several R in profit. Trailing stop has been locked, and I'm looking to do more of that today here. What a move. Gold popping up, dollar bearish. We got to go check the numbers. Let's see what we got in terms of PPI here this morning. Let's go quickly to take a look at that here today. So Forex Factory PPI numbers came in minus 0.3% month over month, and core PPI month over month remained as expected, actually grew by 0.2%, but this is a much lower than expected number by 0.2% lower. We're expecting minus 0.1%. We got minus 0.3%, showing some slowing in producer prices. This is big deal for the dollar, very bearish, I would say, and adds to the case against the dollar right now. Gold finding its bearings, but still stuck at 1950. We'll see if it's able to break out here. And again, I am long S&P 500. That is my primary trade at this moment. Let's talk euro dollar here today. Shooting up big time, big move. What's up?
Dude, what happened to you?
Haven't you heard? It's the summer half off discount sale.
Oh, that's right, I forgot.
Right now only, get half off any of our VIP Discord memberships. These memberships include access to our signals where you can get entries and exits from Frank and I, and full breakdown and analysis with each trade. You can learn our strategies in detail. You can learn how to get funded with our training material to help traders looking for funding. And you can also join the chat room community. We have several membership opportunities, so click the link and check them out for yourself. And remember, you get half off if you either message us or use the discount code you see on the screen now.
So euro, look at this. I mean, this is a 4-hour chart. This is a beautiful bullish move. I mean, you can't get much more of a textbook bullish move going on for the euro right now. And we've got to talk about a few things with this move, right? The euro against the dollar. The euro is kind of winning right now with all this cooling inflation news coming out for the US dollar. The US dollar has lost its touch, I think, for now. Of course, we'll have to see. We have Fed meeting later, so it's too soon to really speak solidly on it. But this PPI number followed before I'm following the CPI number that we got yesterday, in my opinion, confirms the dollar bearish thesis that I've had. Again, price pulling back, found support here this morning, and now breaking clean through the highs. Where's the next trade for this? Well, I think personally, there's nothing here up in these prices, but pullbacks after a breakout, maybe the euro just continues to push higher. Let's take a look at the pound as well. Pound USD looking very bullish as well. Oh my goodness, guys, this is just a strong chart. You can see this makes a lot of sense to me, and I want to show you guys something real quick in terms of central bank forecast stuff. That's what it's all about today. Many traders out there trading purely technical charts. You may not need to know all the fundamentals, but let me give you the highlights right now. The US dollar is so weak because all of this cooling inflation stuff is contributing to forecasts for inflation to continue to decline, which will follow, what will follow will ideally be, if we stay on the course, rates coming down. All you need to know in terms of the simple fundamentals of interest rates, generally speaking, higher interest rates mean stronger currency, but not necessarily where they are today. It's all about the future. The market is all about the future projections. This is why people are so confused by news, especially if they haven't taken the time to learn, the economics behind markets. They're like, oh, news makes no sense. Something comes out and it goes the other way. Usually it makes a lot of sense. It's just that you don't understand the economics, you don't understand the fundamentals. Markets don't pay attention to today's news. They pay attention to forecasts for news in the future, right? So when we talk about interest rates and projections for them to come down, that is why the Fed meeting this afternoon will be so important to market participants. It's all about the future for markets. Markets do not care about, by the time news comes out, most people have sort of anticipated what's going to happen. If you're talking fundamentals, markets are looking forward. So let's look forward together. Inflation numbers are expected to continue coming down, but let's compare it to some other counterparts. Let's talk UK. UK is expected to hold their interest rates for much longer at higher levels, and inflation is expected to come down, but they have a lot further to go. They are just getting under control the 10% handle for inflation, but they still have a lot further than the US to go. So let's remember the key thing we talked about. Higher interest rates mean more bullish for the currency as they're making stuff more expensive and the value of their currency inevitably is going to go up. Well, look at the dollar. Things are already expected to cool off. We're much further in the curve on dealing with inflation. And so when we look at pound USD, I'm bullish, and so is the market.
Right very now, from FX, I'm holding back until I see what the Fed is actually doing. Why? Because what we're seeing is obviously the dollar index rolled over a little bit. Something that I really pay attention to is something like the dollar index, or even when trading crypto, I look at the USDT dominance because they give me information about the overall shape of the rest of the market, right? They give me like a bird's eye view for a quick, like, let's just say trading setups become more difficult or easier when you trade in line with these indices, right? When USDT dominance is going up, then typically it means within the crypto sector, a lot of money is flowing out of the non-stables into the stable. And that actually means it's a rather bearish environment. Same for the dollar index. When the dollar index is rolling over, typically it means that more money is going into the risk markets, right? Whether it's the S&P 500 or the NASDAQ. But if you ask me, those are, it's crazy. They're overextended, like you can't even find words for that. So yeah, the numbers came in cooler, and I think what people really don't pay attention to too much is, as always, the devil is in the details. And if we look at yesterday's CPI number, it looks cooler on the headline, but it's not really cooler when you look into the components. So in fact, like the sticky inflation remained very much sticky. So we still have a lot of very relevant parts of the inflation stuck at around 5%. And don't forget, that's 5% higher than last year's inflation, where the whole war was really flaring up. So that's pretty high still. What brought the whole CPI number down is energy. And mostly energy. And energy is a wild card because energy can be extremely volatile. The Saudis obviously are trying to, it's a cartel control type of market. And if they go all crazy because, I don't know, Biden stood up with the wrong foot and kicked their asses even more, then that could influence markets a lot. One of the things, and I actually wrote an article about that the other day, why commodities continue to be rather beaten down despite this environment. First of all, I don't think that China is recovering in the shape that a lot of people expected or hoped for. And a lot of the narrative about the stock markets going back up had to do with that. So that's one of the things that is really facing a dead end at some point, sooner than later, in my opinion. And the cost of commodities is very high because the interest rates are high. So it's really interesting that when the Fed increases interest rates, it actually makes dealing with commodities more expensive, and that's why their prices are lower, because it reduces the actual demand for it. But nonetheless, if you consider all these things, they actually advocate a weaker economy, which would translate into a cheaper market, which we're not seeing. So another thing that we're seeing is that a lot of them, and I trade a lot of options, for example, too. Like one of my favorite strategies is actually selling premium on the options market. So which is more a quantitative type of strategy. It's not really trading directionally. But the options market, or the liquidity in the options market, drives the market direction in a way that we've never seen before. The impact of that, of the market makers needing to hedge themselves, is just enormous. When so many people are just trading the long side of the options market, short term, that forces market makers, because look, what does a market maker do? A market maker is supposed to provide liquidity so that there can be transactions on the market, right? So the market is functioning. So when a lot of people buy and a lot of people sell, then the market maker only needs to hedge the difference between of that. That's basically managing the risk. However, if there's only buyers, no sellers, what is the market maker going to do? He's going to buy the underlying. Let's drive the underlying up. But these, don't get it twisted, because these are still short-term moves. These are still very much zero DTE, same day type of options. And when the moment comes, when the music stops, as they say, musical chairs, right? The economy gets worse. People have less gambling money to play with, and all of these things happen, you know. At the same time, then there will be no support buyers, and then the lower end can be really forceful. So right now, I prefer, let's just say, hedged quantitative type of strategies over directional strategies, because that directionally trading environment is skewed. So I guess it's a very diplomatic word to use in this instance. And until we have a more clearer picture about that, I prefer to not get too exposed. And in the meantime, like I said, I look at the dollar index and look for interesting setups in correlation with that.
Yeah, no, and Alex, you make some great points there. I also too am on the the options writing, options selling side of things. I enjoy, my favorite thing to do it on is kind of boring, but I like to do it on silver. I like to do it on some of the oil ETFs, that sort of thing, as well as bond ETFs. Very boring. I don't do it very much on individual stocks, but to your point there, it's been a tough market, right? I mean, if you're looking at the S&P 500, obviously, if you're in on this, which to be transparent, I have been riding some longs, which has been awesome. It's been hard to, I can imagine, be very, very difficult to try and be a buyer of this on dip buys, because there's been barely any dips, right? You see these very, very brief things before it shoots back up. And to your point, a little bit of caution is probably warranted, considering, look at this dollar here today. It has just absolutely fallen down. And to your point, devil in the details, dollar bearishness, while I do think that there is some justification there, we have to be cautious that we don't get overly bearish on the dollar, thinking that the Fed is just certainly going to pause from here. It is looking like we have some victories for the Fed. There is no doubt there. I would say that there has been some progress there in the inflation number beating yesterday, PPI coming out better than expected, or cooler than expected. Here this morning, there's definitely some I would say catalyst for dollar bearishness. But remember, guys, the Fed sometimes does not do exactly what the market expects. It has been doing that. It has been pretty much on target the last year or so, generally doing what people expect, but not 100% of the time. So we have to be careful that, again, it's a crowded trade right now, being short the dollar, being long indices, and you have to be very careful when you get very crowded trades, especially you mentioned options positioning is reaching some extremes. It'll be interesting to see how that plays out. So actually,
if I just may get another very interesting thing that especially FX traders, in my opinion, should look at is sentiment. You could grab those from my FX book, from FXCM, from a number of brokerages, or there's tools that have this consolidated. But because when you said crowded trade, it rang in my ear. When everybody's sitting on one side of the boat, it's really you should consider if that is the side you want to continue to be on, or because at some point everybody's rushing through the same door at the same time, and this is when the problems happen.
Right. No, and I think that's an amazing point as well too. Is what we generally find is, and Alex, I'm sure you've seen this before. Right now, what's actually very curious is that I don't necessarily either think that buying the dollar at this point, personally, I would find that to be a very tough trade, because if we do look at sentiment, what's interesting is that on the dollar, like you mentioned, you can grab this data from a variety of places. We pull it from a couple different brokerages and sort of aggregate it. But right now, the dollar trade is very, very crowded on the long side by retail traders. I'm sorry. So
Wow.
client positioning, and this is something that we generally see. It's a weird concept, but usually when something like this starts falling off the cliff, we see client positioning start to polarize, where they start trying to buy this. And yes, there may be some room to the upside, but what very often we see happening is a day like today, where this is just this ginormous run against retail traders who are very long. They've been long for a while, and it's an interesting thing to see that kind of playing out here today. Is there upside for the dollar? Possibly, but again, I think you got to wait to see some sort of bounce, some sort of reversal of that retail bias. Again, just to add one more thing before you pick it up, pound USD, Aussie USD, it does seem like retail traders are betting against that pound strength and buying the dollar, and betting against the Australian strength and buying the dollar. So it's an interesting sort of polarizing direction right now on the dollar from retail traders.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.